I think the big challenge for the region has been connectivity, especially air and freight connectivity has made it difficult for Southeast Asia, which is many of the economies in Southeast Asia are very trade exposed. It's made it difficult for them to move goods in and around the region, but it's also made it very difficult for them in the services space, not just travel and tourism, on which most of the ASEAN economies are quite dependent, but also simple things like getting staff in and out to fix broken machinery or to think about new expansion, et cetera. So movement of people restrictions and movement of goods restrictions has also hit the region pretty hard. So we have seen this trend for the last couple of years. It accelerated, especially under the US-China trade war, in which many companies started to think about whether they were overexposed to China or the China market, over-reliant on that market. I think COVID has accelerated that, which is to say, firms have said, actually, we need to be careful about being overexposed to any market, China being one of them, but any market. We need to be more diversified, more resilient. So firms have begun that conversation internally, most of them in 2020, but I haven't seen a lot of firms actually execute changes, partly because of the COVID pandemic. It's difficult, as I just mentioned, to get staff in and out, but also because it's unclear what the landscape will look like going forward, which means it's unclear how much you want to spend on developing new capacity, new capabilities, moving manufacturing, switching up where you have staff located, et cetera. I think firms are gonna be doing more of that 2021 and beyond, but they haven't done as much as certainly the media would suggest, and not in 2020, given the COVID pandemic and such levels of disruption in both supply and demand. Vietnam always comes out on top. Vietnam comes out on top for a variety of reasons in the trade space, because they have connections with a lot of different markets now. But I think it's not just the fact that they have preferential treatment under different trade agreements. It's also that the government has embraced domestic level reforms to make it easier for trade to take place in and out of Vietnam. So they've tried to upgrade infrastructure. They've tried to streamline rules. They've tried to just make it simpler and easier for companies to do business in and out of Vietnam. That sort of ease of doing business, if you will, is not replicated across all of Southeast Asia. So we have many markets that continue to be challenging for business operations. Regulations are unclear, they're changed in a second, infrastructure remains a challenge, talent is a problem, so there's a lot of reasons why firms tend to look to a place like Vietnam over other markets in the region, just because it's just too difficult to do business elsewhere. And COVID has made this even more glaringly apparent. So one firm, for instance, was granted a license to continue to work under COVID as an essential operation. Fantastic. They continued to get their staff in. Of course, they had to make sure that they were safe. The staff themselves were safe. But where they ran into troubles is they couldn't get any boxes, because the company that delivered the boxes to them was not an essential goods producer, and they were not licensed to operate. And so the firm could produce lots of things, but they couldn't get them out of the factory because they couldn't get boxes. And this inability to get the government to pay attention to their challenges has led them to say, in the future, we shall not be expanding our footprint here. We will find a different market that's more flexible and that's more reactive to the kinds of concerns that we have. And I think you're going to see that in a lot of different markets in the region, where the COVID experience is like a magnifying glass on challenges that may have been there before, but for which firms are now not interested in engaging in challenging operations if they don't have to. So I think the short answer to this question is governments that have the right policies in place and facilitate trade and business operations will do better than those that don't. This is a long-standing issue anyways, but it's magnified in the post-pandemic challenges for firms. And the sectors that benefit are those that can be delivered in and around this region. So they tend to be not the top end of high tech, but they could be, but sort of mid tech. And then other areas, agricultural trade, of course, textiles, and increasingly now services. Companies can deal with a lot of things, But companies have a hard time dealing with high levels of risk and, crucially, high levels of uncertainty. So firms can navigate around an awful lot of things, both large and small companies, but they have troubles dealing with high risk and high uncertainty. So what they're looking for from government, above all else, I would say, is how do we lower the risk of operating in and out of a particular market? And crucially, how do we increase the certainty that whatever is the framework, the rules, the regulations, the enforcement actions, whatever it is, remains consistent? Even if I don't like what those rules might be, at least if I know what they are, I am able to manage, and I'm able to manage around them or manage, in that space. But the high levels of risk and uncertainty that we see in many markets in this region have made it very challenging for firms to operate. And going forward in a post-pandemic world, I think companies are going to be even more careful about where they place investments, because they want to make sure that if we have another crisis of whatever kind, that they can get what they need, that they can get people in and out, that they can get the goods that they need, that the boxes get delivered or whatever it is. That is crucial to a firm's operation. It's critical. It's critical for Southeast Asia. And I think globally, it has the potential to be game-changing. And it has the potential to be game-changing, not, I will say, up front, because they intended that at the outset. It wasn't like these 16 economies that were getting together in RCEP, all 10 members of ASEAN, plus China, Japan, Korea, India, Australia, and New Zealand. They didn't sit down in 2012, heading into 2013, and say, let's make a game-changing platform for trade in the next decade. No. What they did was they said, let's try to make trade easier. Let's take 5 existing agreements, consolidate them. This is going to be easy. And then it turned out to be harder than they thought. It took longer than they expected. And now that they've actually concluded in 2020, conditions have changed. So we're having lots of disruption, global trading system not working like it used to, companies far more worried about risk and uncertainty. So RCEP becomes more urgent than ever, and particularly for Southeast Asia, because this is an opportunity to create goods and services in Asia for Asia, and actually start that sort of, economic integration, which ASEAN has been talking about for a long time, but has been struggling to deliver internally for a very long time. We've had these challenges moving goods and services around in ASEAN for a long time, and now you're making it at the larger level in Asia. And we're going to have potentially Asia as a final market for goods and services, which has not happened before. We've had most of the goods and services produced in this region go to Europe, they go to the United States, they go outside of the region for final consumption. And increasingly, after RCEP comes into force, you can imagine Asia producing for Asia. That's an entirely new sort of way of thinking about trade that has not happened because it's been too difficult to move goods and services across Asia. Yes, it matters. It matters for the US, of course, which is increasingly having companies that are missing competitive advantage compared to all of their other counterpart firms. I think that's a real problem for American companies. It's also a problem for the United States, which is increasingly isolated. It does not have the same kind of trade and economic links that other countries do. So here in Asia, again, RCEP just concluded. The Europeans, I think we should never forget how busy the Europeans have been in signing trade agreements, including across Asia. They're in the middle of at least 3 intense negotiations at the moment with Indonesia, with Australia, and with New Zealand. That plus their existing network in the region gives them far more of a footprint in Asia than the United States has, with just 3 agreements in place with Korea, with Singapore, and Australia. So I think the US increasingly at a disadvantage as they go forward on trade. Well, this is an agreement that is really quite the gold standard, I will say. So unlike RCEP, which I'm very excited about RCEP, but it doesn't deliver guaranteed benefits for whatever kind of firm you are, CPTPP delivers benefits for companies in goods and services and investment, et cetera. Wherever you are, whatever you do, we can find you new market opportunities. We can find you cost savings. That's a rare promise for a trade agreement, I will tell you. So there are real benefits for being in the CPTPP, which many governments are increasingly recognizing and slowly trying to figure out how they might become a part of that. Political obstacles are a challenge. And I think the Chinese have recognized that there are some benefits to being in CPTPP. There are some benefits not just from being in the agreement, but also using that as a potential way to do domestic level reforms, which are always difficult to do. So many governments, like Vietnam, have seized on the opportunity to do high standard agreements so that they can get domestic level reforms in place that make them a better place to do business. We see this Vietnam again, taking huge advantage and getting real benefits from that. I think China puts itself a little bit in that category. It's not that they need to have the CPTPP, but they could say, well, actually, in some ways, it would be easier for us, for example, to have more robust intellectual property rights protections if we sign another agreement and then we had another sort of motivating force to protect intellectual property rights more than we do right now. I think that's helpful. For the US, are they going to get back to CPTPP? It would be great for the US to get in, obviously, but I do think there are some real practical challenges around getting it done and around the timelines for getting it done. Will we have a new area of interest from the United States after China's statement on CPTPP and the close of RCEP? Maybe. I will tell you that in Washington, people are certainly paying much more attention to Asia and Asia trade than they were in the last bit of time. But is that enough to change the calculus in Washington around what it would take to actually get in the CPTPP and do so quickly? I think that's unclear.